Singapore's economy needs to restructure to face new global realities. According to economist Manu Bhaskaran, the island republic needs to rethink its economic strategies for the future.
If you look at all the economic indicators, they are rather weak. The lead indicator in the second quarter perked up a little bit, but generally it's been down. Industrial production, exports, whether it is domestic exports or re-exports, all weak. Employment creation picked up in the second quarter after falling in the first quarter, but on average is weaker than last year. So clearly, I think we are facing some deep challenges. I think a lot has to do with obviously the external sector. The global economy has not been of much help yet. But I suspect the global economy is going to turn. I think I'm much more positive about the US economy than the consensus. Secondly, oil prices have fallen again. That is net a very big positive for the global economy. And thirdly, bond yields, liquidity, cost of capital globally remains quite low. Fourthly, there are huge new technologies reaching maturing points, takeoff points. I think that's going to spur a big round of capital investment. And our manufacturing sector is really geared around manufacturing stuff, components, whatever, for capital goods. So I think the external economy should turn around. Now, my main concern is the domestic economy, where I think we have clearly lost cost competitiveness, seriously lost it. Our costs have escalated much faster than our trading partners. So that's the fundamental thing. How do we deal with a high-cost economy? Because the government was very concerned that the tighter labour policies would lead to higher wage inflation and therefore to higher consumer inflation, the central bank has been appreciating the Sing dollar. So the cost competitiveness loss has been accentuated by the currency also appreciating, right? So it's a double whammy. So what's happening, and this is the worry in the domestic economy, is that companies don't just sit still when they lose competitiveness, when their margins are squeezed, they restructure. And the way they restructure can be deflationary. Basically, they relocate, they downsize, they reduce operating hours, they automate, they might move operations to Batam or to Negeri Sembilan or Iskandar or something. These are basically deflationary in nature. And so I suspect we have to go through a painful adjustment in order to regain competitiveness. We've done it before. It could mean a couple of years more of fairly low growth, and that could be worsened by a real estate deflation as well, which is beginning to unfold. This is just part of a free enterprise market economy adjusting. There's pain. If you take the pain and you do the right things and policies are supportive, the economy turns around and we'll start doing well again. We went through this before. This is not new. 2001 to 2003, we had a deflationary adjustment. After that, we had a huge bout of growth, right? That's how the Singapore economy operates. We have vast fiscal reserves. If the economy tanks a lot more than expected, we can support demand. We are a regional hub. We have few competitors outside Hong Kong. We are in the middle of a rapidly growing region with China and India nearby. It cannot be negative. There's a lot going for us. But I suspect that next couple of years, we will see slow growth and we will see companies relocating, downsizing. We may see prices continuing to fall. We will see real estate prices fall. That's going to hurt. Non-performing loans may well go up, right? So I think there's a period of adjustment. But again, like I said, we have strong banks, right? So, I don't see any destabilizing increase in non-performing loans or anything like that.
Manu Bhaskaran says that the Singapore's economy will be able to weather the changes despite some weakness this year. He says Singapore's strong financial institutions and vast savings will pull the economy through.